Energy producer Oil Search has come through with full-year numbers to the end of December 2014 today. They were in line with what the market had expected. They surprised the market with a special dividend, but it did mean that their dividend guidance was in line with their payout ratio that they told the market before the end of this financial result was released. Looking at the numbers, well, their total production in line with expectations, up 186%, and they've lifted their guidance for 2015 back in December as well, so that was unchanged today in this result. Their revenue up around 110%, really boosted by the fact that this was a landmark year for the company, coming through with their LNG project in Papua New Guinea, which has moved into stage 2 and is expected to see greater returns and production over the next year. They've also come out with tighter controls, and that's after their completion of their strategic review back in October 2014. We saw Oil Search on the front foot with the fall in the oil price, looking at what they could do to take some costs out of their business. And today they came through and said they will be actually taking more costs out, looking at total costs being cut around 20% in their capital expenditure for 2015, their exploration and valuation spending down by 25%, their production capex also being cut by around 20%, and their corporate capex being lowered at around 40%. They're also reducing their production costs as well at most of their assets, and what they're trying to do is look at ways of taking any VAT out of the business to be able to get better returns to shareholders. And talking about returns to shareholders, they did come out today and say they would be paying an interim dividend to shareholders of 8 US cents a share and a special dividend of 4 US cents a share. And this is in line with their previous guidance to pay out between 35 and 50% of their underlying profit out to shareholders, totalling today a 44% payout to shareholders. Now, there was some one-offs in this result, totalling $180.6 million, higher finance costs as expected because of the new business that's coming online in Papua New Guinea, but their cash flow position very solid.